Welcome to today's Morning Report Charts Process on Thursday, 9th of November with me, Richard Perry, market analyst at Hantec Markets. We've got a relatively settled look to these markets, nothing too significant in terms of direction. You've got a slight amount of dollar weakness that is sort of filtering through this market still. You've seen the US trade weighted dollar just drifting off of touch, and that's coming with these treasury yields moving. The 10-year treasury yield again sort of falling away today. That comes as the 2-year yield rises, flattening off that yield curve ever more. 66 basis points now, and the tightest spread between the 2s10s since November 2017. So 2007. So exactly 10 years there, pretty much to the day. This is coming as the market continues to sort of be a little bit more concerned by the noises coming out over tax reform from the committee stage, and the fact that the Senate and the House of Representatives are sort of forming different views on tax reform, and how the Republicans are actually going to play this one out in terms of actually getting it through is a potential drag on the outlook for inflation going forward, and also growth, and certainly the market is reflecting this in these 10-year yields, which have just pulled back towards 2.3%. Now you've also got impact across the forex majors on the back of this. I look at a couple of spreads. I look at the spread between the Bund yield and the US 10-year yield, and that is a positive correlation with euro-dollar, and the fact that these spreads are tightening has certainly just stalled that dollar strength that we had pulling through euro-dollar, which was dragging the market lower. Also dollar-yen and the 10-year treasury yield, which tend to move very much in lockstep. 10-year treasury yield falling away. Now we're starting to see dollar-yen tracking lower, and that is a feature that I'll be focusing on. If this 10-year yield continues to drop back below 2.3%, that would be negative for dollar-yen. So a couple of factors to watch out there, but generally speaking across these majors, not a great deal of direction. Bit of underperformance out of sterling today. You've got the Brexit negotiations resuming. How's that going to play out in the next sort of day or so? So any sort of communications out of that meeting will have an impact on sterling. But at the moment, certainly you're seeing the dollar underperforming against the yen. And generally speaking, we're starting to see the euro just sort of gathering a little bit of support as well. In terms of equity markets, little real direction at all, and that's come on the fact that these sort of Wall Street markets are, they are drifting higher, and I use that word drifting rather than sort of moving strongly higher. And I still think that there's a degree of possible concern that could come with that. The fact that the market isn't decisive in any way on Wall Street now. So that's generally what we're seeing in the markets at the moment. A little bit of jobless claims today is the only real economic data. That's at 130.232, up from 229 last week. Now euro yen is a key market that is a bit of a gauge of sentiment, and euro yen seems to be breaking down. I've been talking about this consolidation range for the last few weeks, and it has tested the bottom of that range several times. It's only tested that range once on the upside, but repeated pressure on the downside. Now we're seeing intraday breaches of that 131.70 range low. Yesterday we saw a move to 31.37, which was what was that, an almost a 2-month low, and again today it's sort of breaking that support at 31.70. A closing breach of that support would sort of drive a downside break. But you look at these momentum indicators, I'll sort of zoom out a bit to show you the RSI, 43. That is the lowest. If you see a close on that, that is the lowest since April. You're also seeing the MACD lines gaining a bit of traction, falling below below neutral would be the first time that's been also seen since April. So these momentum indicators are beginning to suggest that the market is rolling over. A closing breach would be 280 pips of projected downside. You'd sort of look towards these September lows as sort of likely to be tested in that case, if that is to be seen. So yeah, I think it looks like the market is sort of beginning to shape for a breakdown on euro yen. And you've sort of seen that on the hourly chart as well, where these rallies are sort of failing at lower levels. Momentum indicators failing underneath sort of 70 on the RSI, crossover and sell signal on the MACD line. So yeah, it's gaining traction, seemingly to the downside. So a closing break of 131.70 is what we'd be looking out for. Next support below that, 130.60. Is that reaction low from mid-September. So I wish you good luck in your trading today, and I'll speak to you later.